Good morning and welcome to Market Cafe. You're on ET now with me, Lisa Fernandez, and with me I have Shreyansi Singh. A very good morning to you, Shreyansi. And during the course of the next 1 hour, we take you not only through the international handover coming in, but also keep you ready for the day ahead with the queues, with the brokerages lined up, and also the important news and announcements that you have to keep an eye on. But let's start with the international handover coming in, and let's go across to Shreyansi. Shreyansi, last week the market closed in green, but we have important, the events lined up, like we have the Fed meet also coming up this week. So how is the market penciling in the same?
No, absolutely. So it definitely is a data-heavy week for Wall Street. But when you look at what happened last week also, the S&P 500 rose to hit a new high for the year on Friday. And this was after the November jobs report and University of Michigan consumer survey data signaled a resilient economy as well as cooling inflation. Now, this, of course, fueled hopes for a so-called soft landing scenario. So that definitely was in focus. Now, when you look at market moves, you did have the S&P 500 and the Nasdaq Composite adding about 0.4%. When you look at the Dow Jones Industrial Average, that also gained 0.4%. And all the major averages finished the week with gains. Now, the broad market index jumped 0.2% for the period, and the Dow finished marginally higher. Now, both indexes wrapped 6 winning weeks. And this was, of course, their longest run since 2019. So that definitely remained in focus. And November's non-farm payrolls also remained in focus because the report did show an unexpected drop in the unemployment rate. Meanwhile, a closely watched University of Michigan survey that I mentioned, that showed inflation expectations drop and consumer sentiment jump in December to its highest level since July. So that definitely was a very data-heavy day for the markets. Now, when you look at the European markets, they held in positive territory on Friday, and this was as traders around the world assessed a key November jobs report that was out of the US, like we discussed before. Now, when you look at the Treasury yields, they jumped on Friday, and this was again on the back of all of that data and what that was suggesting about the market. It does remain to be seen what the Federal Reserve does and says on December 13th. But when you look at the yield on the 10-year Treasury note, that was up by 10 basis points, around that 4.23% mark. And this was as it recovered some losses made earlier in the week. So that is largely the handover coming in from the US.
Right, but let's look at what happened on the crude and commodity check as well. Well, talking about the US crude oil that rallied on Friday, but it still booked its 7th straight week of losses, and this was on the back of record production and demand worries that weighed on the prices. Now, talking about the WTI contract prices, that rose around 2.7%, and if I look at the price now, WTI crude, that stands at around $71 per barrel, and if I look at Brent crude, even that rose around 2.4%, and now it's at around $75 per barrel. But so despite the Friday's rebound, US crude as well as the global benchmark, it lost about 4% for the week, and that was mainly on the back of the US gas inventories, which saw the biggest increase in the last 9 weeks. So traders have become increasingly bearish in the recent weeks because the record production in the US that collides with weakening demand coming in from China, and several OPEC members and allies like Russia, they have promised production cuts of around 2.2 million barrels per day, and this is for the first quarter of 2024. Now, this is undertaken in an effort to lift the prices, but the traders are quite skeptical that they will actually deliver given the recent divisions in the group. So if I look at Brent crude prices and oil prices, they are trading in green as of now. But if I move on to the gold prices, that slid, we were at a record high some days ago, but now it's hovering in that $2,000 per ounce range, and this is because the strong US job data that Shreyansi pointed out, that is kind of clouding the Fed rate cuts bet that was taken, that was seen by investors, and they were betting on the Fed rate hikes. So yes, that was on the gold as well as the other crude as well as commodity check.
Well, absolutely. Like you said, data-heavy week for the US lined up this week also. Now, on December 12th, you do have the November CPI. On December 13th, the FOMC decision, initial jobless claims the day after that, and November IIP data the day after that. Now, from UK, you do have the unemployment data as well as IIP data and Bank of England's rate decision on December 14th, followed by S&P Global and manufacturing PMI data. Now, in terms of global cues from the Eurozone, you do have the IIP data, ECB rate decision, S&P Global Manufacturing PMI. So, very data-heavy week there as well. And back home, October IIP and November CPI on December 12th, November trade data on December 13th, and November WPI data the day after that. Now, in terms of IPO action, definitely a good week lined up. You do have Domes Industries as well as India Shelter FinCorp. So do keep an eye on both of those. And December 9th, you do have board meets for Balkrishna Paper Mills as well as Lloyd's Engineering Works. So those counters would remain in focus on December 9th. And on December 11th, you do have EasyTrip that will be announcing its dividend decision. Fedbank Financial Services that will be announcing Q2 earnings. Chemcon Specialty, and the lock opens for this particular counter. So that counter would definitely also remain in focus. And so will Adani Ports on December 12th, because there's a meet that is lined up for Adani Ports. Jupiter Lifeline has a lock-in that opens on 2.7% equity. So that counter would also definitely remain in focus, and so will RCF, because it is the last date to buy to be eligible for dividend. RCF will remain in the spotlight, and so will Mastec on December 13th, because the company is mulling an issue of fully paid up equity shares. And on December 13th, our systems will also remain in the spotlight, because the company is mulling declaration of interim dividend. And Hindustan Zinc on the same day, last day to buy to be eligible for dividend, so do keep an eye on that one as well. Now on December 14th, Jindal SAW has a fundraise meet and EMS has a lock-in that opens. So both of these counters would remain in focus, and on December 15th, Gandhar Oil will be announcing its Q2 earnings. So that counter would also remain in focus on that particular date.
Well, now let's go on to some global stories coming in. Onto some somber news. The war between Israel as well as Hamas rages on, claiming lives of almost 18,000 Palestinians so far. In the last 24 hours alone, incessant strikes from Israel, they hit more than 250 targets, killing over 300 people. World Health Organization has called Gaza's health situation catastrophic and requested immediate, unimpeded access to the Strip. Now, the Palestinian Health Ministry said that there is no safe place to go in for the Gaza Strip. The UN General Assembly is likely to vote on Tuesday on a draft resolution demanding an immediate humanitarian ceasefire.
Well, an important cues to watch this week. The Federal Reserve will meet to discuss policy rates and economic outlook, the last of 2023. Remember, the Fed will have to price in strong recent data, while experts are of the view that the US economy is geared up for a soft landing. The Fed is largely expected to hold interest rates and will also likely continue to allow assets to roll off its balance sheet as it fights to bring down inflation.
And keeping it up with the US, and staying with the topic, the non-farm payrolls data that was released over the weekend that indicated that the economy it added around 1.99 lakh jobs in November, and this is another sign of the labor market strength. Now, the unemployment rate that has dropped to 3.7%, and it beat the forecast of 3.9%. Now, various sectors it saw growth, with healthcare that led by adding 77,000 jobs.
And amid muted outlook and a disappointing year in the public market, an investor group has made an offer of $5.8 billion to take department store chain Macy's private. Now, reports suggest that this includes Ark House Management and Brigade Capital, who believe that the company is undervalued. The offer for the Bloomingdale parent is at a 21% premium.
And shifting focus on China's consumer prices that fell the fastest in 3 years in November, and that was by 5.5% on year-on-year basis. It was steeper than the drop that was seen in October. In fact, it was the fastest decline in the CPI since November 2020 as the cost of food decreased at the strongest pace in over 2 years. Now, moreover, the data coming in, the factory gate deflation that deepened, suggesting heightening deflationary pressure as weak domestic demand that casts doubts over the economic recovery.
And a Philippine boat and a Chinese ship have collided near a contested reef in the latest territorial dispute between the two countries in the South China Sea. Both sides traded accusations over the collision as tensions escalate. The Philippine Coast Guard accused China of firing water cannons and ramming resupply vessels and a Coast Guard ship. It also accused China of causing severe damage to the engine of one boat. Meanwhile, China's Coast Guard said the Philippine vessel intentionally rammed its ship.
And with that, let's slip into a short break, but stay tuned on the show as we mark the Asian markets post the break.
Welcome back. Thank you so much for staying tuned in. Let's take a look at the Asian markets. Now, the Asia Pacific markets were mostly up on Monday as investors assessed November inflation numbers from China, which declined at a faster than expected pace. Now, the consumer price index fell 0.5% year-on-year, more than the 0.1% drop expected by economists polled by Reuters, and the fastest slide since November 2020. Now, November also marked the fourth straight month of PPI decline and the quickest since August. So you do have the Hang Seng that is definitely down, and it's down more than 1%. So not a good day for the Hang Seng thus far. But when you look at Shanghai, also similar levels, down about 1%. On the flip side, though, you do have strong gains coming in for Japan's Nikkei. So when you look at Nikkei, that is up strongly there, up about 2%. And when you look at Australia's ASX 200, that also started Monday up around 0.2%. It's still around those levels. So definitely strong gains coming in for Nikkei and ASX 200. Hang Seng and Shanghai strongly in the red right now. So that largely is what the Asian markets are indicating. You do have the Kospi that is doing barely anything, but a mixed handover coming in thus far. Now, when you look at the Nifty, the gap up, the Nifty implied is indicating a gap down of about 6 points. So do keep an eye on that as well.
Right, so let's see how it pans out for our market.
Welcome back. Thank you so much for staying tuned in. Well, it is an ET Now exclusive, and sources tell your channel that the Securities Exchange Board of India, SEBI, may reduce the minimum ticket size for SIPs to as low as 250 rupees per month. Ankur Mishra is standing by with more details. Ankur?
Yes, market regulator SEBI is said to be working with mutual fund industry for rupees 250 SIP. Yes, you heard it right. Current minimum limit is 500 for SIP, that is systematic investment plan, which you can invest monthly or quarterly. Now that limit is considered to be reduced to 250. It could be a HUL sachet movement as per the sources we spoke to. However, let me also make that clear that it is at a discussion stage with regulator. Regulators just assessing the impact of reducing the SIP's minimum limit. What will be the implication? That study is currently underway by the regulator, and only after that, as a process, there will be draft guidelines, and finally the guidelines will be released by the regulator. But for now, the idea of bringing rupees 250 SIP is on the table. It is considered with the mutual fund industry, and remember, as far as the latest data released by AMFI, the AUM of mutual fund industry has touched 50,000 crore, and if you talk about SIP, that has also crossed 17,000 crore.
Well, thank you, Ankur, for sharing that update coming in from SEBI on SIPs. But moving on the important AMFI data for November that got released, the equity fund inflows that declined by 22%, and it marked 33rd consecutive month of net inflows. Now, despite this drop, SIPs that surpassed around 17,000 crore rupees for the first time, and this was on the back of strong small cap as well as the mid cap inflows for the 10th straight month. Well, let's listen into more on this from NS Venkatesh, who is the CEO of AMFI, on what he has to say on the AMFI data that got released.
We are very glad to see that the SIP number has gone above 17,000 crore, and the investors have continued to repose faith in the mutual fund as an investment vehicle and used SIP as a route for investments. We are seeing positive sentiment from the retail investors when they are investing through the SIP route.
And as the December 21st deadline for Zee-Sony merger approaches, leadership struggle still continues. ET now has learned from sources that Zee has still not agreed on giving MD and CEO post to Sony India representative. Ankur Mishra is standing by yet again with more details. Ankur?
Yes, both the parties are trying to resolve the matter, as we understand that the meeting which was held last week did not yield any result, and Puneet Goenka continues to press for his name as MD and CEO of the merged entity because he believes that agreement was based on that fact. However, if you see the Sony stance, that continues that it should be NP Singh who can be MD and CEO of the merged entity, because they believe that since SEBI investigation is currently underway against Mr. Goenka, therefore it should not have any problem later on the merged entity. So that problem needs to be solved before the deadline, because the merger needs to get completed by 21st of December, which was the agreement which was signed between the two parties. And as far as the process concerned, they need to move to INB ministry for filing, as that approval needs to be obtained before moving to finally ROC for getting that merger completed. So all these processes needs to be completed within this 2 weeks deadline, and before that we understand that the meeting which was held last week remained inconclusive. Apart from that, there is also a petition which was filed by IDBI Bank as well as Axis Finance, which continues in NCLAT, and that was against the approval which was given by NCLT on Zee and Sony merger.
Well, thank you, Ankur, for that, for sharing the update on Zee-Sony merger. But we are at the close of the year, another year of beating the index. But that's the story of just 3 stocks which have beaten the index consistently for 7 straight years. We're talking about Trent, Varun Beverages and ESAB India. Now we have Somit here. Somit, break down the numbers for us and what has driven the outperformance in these stocks.
Well, if you see, there are more than 4,700 stocks listed in India, but only 3 of them have managed to beat the index on a consistent basis for the last.
Okay, so we have some technical glitch on there, but we'll come back post the break with the consistent compounder. So let's shift into a short break and stay tuned on the show.
Welcome back. Thank you so much for staying tuned in. Well, let's take a look at Trent, Varun Beverages and ESAB India. Now, these 3 stocks have consistently managed to beat the index for 7 consecutive years. And Somit is standing by with more details. Somit?
Well, if you see, there are more than 4,700 listed stocks in India. Out of this, only 3 have managed to beat the Indian benchmark index, that is Nifty 50, right from 2017 till 2023 for the last 7 consecutive years. And that's Trent, Varun Beverages and ESAB. Now, these 3 stocks have given returns more than what Nifty 50 had given in the individual calendar years, that is from 2017 till 2023. When it comes to Trent, it is the fundamentals which have been growing much of what the street was expecting, which has also led to an earnings upgrade cycle. Along with that, despite weak demand, the company has managed to outperform its peers. It has reported consistently a strong same-store sales growth and higher footprints, and also its Zudio store has been a success since its start back in FY17. If you see, Zudio has managed to reach around more than 350 stores, and its average productivity is more than 2 times that of the industry average. Now, apart from this, it is also a strong profitable company, that is Trent. Now, moving on to Varun Beverages. Now, Varun Beverages has not only expanded in India but also on the international side. Also, it's one of the global largest global franchises of PepsiCo, and in India, if you see, the company has a presence in nearly 27 out of the 28 states and in 7 out of the 8 union territories in India. And apart from this, globally, it has presence in nearly 5 countries. Now, the company's energy drink strength has grown exponentially over the last 2 years, and the company has managed to increase its distribution footprint from 2 million back in 2018 to close to 3.5 million in 2023, and it has continuously logged a volume growth of nearly 15%. And lastly, when it comes to ESAB India, the company's revenue has grown at a CAGR of nearly 28% over the last 5 years. Margins, which were earlier in the band of around 8 to 10%, have expanded to nearly 19%. It has a strong balance sheet, which is nearly debt-free, and a strong parent company, which is an MNC, US-based MNC. And of late, if you see, the company has been continuously benefiting owing to the rise in construction activity that we are seeing in India, and also because of the more government focus towards infra and the rising infra spends. So these are the 3 companies that have consistently beat the Nifty in the last 7 years.
Some interesting data shared by you, Somit, on Trent, Varun Beverages as well as ESAB India. They were consistent compounders and were in focus this year. But talking about Dr. Reddy's, that will be in focus today, and this was after the US FDA. They have completed checks of its R&D center at Hyderabad, and Antique is believing that these 7 observations, they are quite serious, and the side that they could get some warning letters. So what's the other details coming in, and what will be the impact on Dr. Reddy's?
Well, there are 2 separate news flows when it comes to Dr. Reddy's. The first one, which has come over the weekend, where US FDA had inspected their R&D facility in Bachupalli. Now, they have given 3 observations for that facility. Now, we do not know the seriousness of these observations, so we'll have to wait and watch how that pans out. But do remember, it's an R&D facility and not a revenue-generating one. But earlier in October 2023, the US FDA had inspected the same facility in Bachupalli, and that time they had given around 10 observations. And what Antique is understanding from the list of observations is that 7 out of the 10 observations are very serious in nature, and this could lead to a warning letter for the company going forward. Now, do remember that warning letter does not is just a formal communication of dissatisfactory compliance, and it does not stop the current sales from a plant. But also, a warning letter does not mean that there will be necessarily an letter going forward. Now, import alert is the worst that could happen to Dr. Reddy going forward, because if that happens, then the current sales also stop from the plant, and this will continue to remain an overhang on the share prices of Dr. Reddy. Now, the 7 observations that were serious in nature were pertaining to quality control, faulty equipment, and data integrity. Now, more about this FTO03 unit, which had seen around 10 observations. Firstly, it is one of the critical sites for Dr. Reddy. It manufactures nearly 100 products, of which 70 products are manufactured as commodities. Facility contributes nearly 30% of the total US sales, and this site manufactures 4 out of the top 10 products for Dr. Reddy, that is Ciprodex, Nexium, Wellsite, and Toprol. So keep an eye out for Dr. Reddy in trade.
Well, absolutely, Somit. So definitely we'll be keeping an eye on all of those 4 counters. But which are the other counters that will remain in focus on account of news flow? Ashesha is standing by with that list. Ashesha?
Well, yes, first up, let's talk about United Breweries, and Nuvama in fact met with the management of United Breweries, and they've spoken about their expansion plans and the fact that the company has been focusing on expanding their market share, where the company says that the current market share stands at about 49%. In the premium category, company's market share stands at about less than 20%, and that the company has been aggressively focusing on increasing their market share. In the recent months, company has been gaining market share in the states like Rajasthan, UP and Odisha, and as far as gross margins are concerned, the company has also highlighted that the worst of margin pressure is behind us and that raw material prices have now started easing. As far as other stocks to watch out for are concerned, let's also talk about Tata Motors, and this is because the company has gone ahead and said that they will be hiking prices for its commercial vehicle segment by as much as 3% with effect from the 1st of January. Price increase will be to offset the residual impact of past input costs, and that it will be applicable across its wide range of commercial vehicles. On the back of this price increase that has come through, Tata Motors will be in focus. Let's also talk about Mazagon Dock on the back of an order win, where the company said that ONGC has placed a notification of award of contract for replacement of pipeline project worth about 1145 crores. So order win is why Mazagon Dock will also be in focus. Let's also talk about Imagica then, where the company has signed a memorandum of understanding with the government of Uttarakhand, and this is to set up an amusement park in the state of Uttarakhand. Let's also talk about Bank of India. Remember, the stock was in focus last week on the back of their fundraising plans via QIP, and the company has now said that they've approved issue of equity shares via QIP to the tune of 4,500 crores. This has been done at an issue price of 100.2 rupees per share, which is at a discount of about 4.9% to their predetermined floor price. So on the back of these fundraising plans that the company had informed the exchanges about earlier, the stock will continue to be in focus today. Meanwhile, SpiceJet will also be in focus, and that is because Board of Directors meet is scheduled to happen today to consider fundraising plans. So keep an eye out on this counter as well.
Resha, thank you for that. We'll definitely keep an eye on all these stocks, but you also track United Breweries and they have conducted their management meet. So what are the important key takeaways coming in from this? So from what I see, it's quite positive.
Nuvama met with the management of United Breweries, and on the back of that, they've come out with a detailed report. First up, they've spoken about their market share expansion plans, where they say that they are focusing on winning back market share. Currently, their all India market share stands at about 49%, and as far as the premium category is concerned, company's market share stands at a little less than 20%. But the company said that they've achieved market share expansion in the past few quarters, especially in the states of Rajasthan, Uttar Pradesh and Odisha. As far as gross margins are concerned, they say worst of barley pressure is now behind, and that glass costs have also moderated in the past few quarters, and perhaps margins could expand from here on. As far as companies and management's focus is concerned, they say that they aim to increase customer engagement and increase focus on premiumized portfolio. Remember, this portfolio contributes about 15% of their total revenues currently, and they aim to increase it further as we move on. As far as pricing is concerned, they say that they are working with the state governments to make favorable policies for beer, and they also say that they see attractive industry opportunity given that beer penetration in urban India is currently less than 20%. So good opportunity, reducing raw material costs, which could perhaps increase margins going forward. And the fact that the company is focusing on market share expansion is why Nuvama is bullish on this counter.
Well, absolutely, Ashesha. So busy day for you, but Lloyd's Metal will also be in focus on the back of capex plans. So what do those plans look like?
Well, yes, so the management of Lloyd's Metals has gone ahead and approved total capex of about 25,860 crores. The company also said that this will be undertaken over the next 6 to 7 years. Capex will be funded internally, and that not substantial debt will be undertaken in order to fund this capex. Let's also talk about the breakup of this capex, where the company said that the total capex outlay stands at about 26,000 odd crores, out of which 16,000 crores capex will be utilized for setting up a 3 million ton per annum integrated steel plant. Apart from this, 5,000 crore capex will be utilized for additional 45 MTPA beneficial plant which will be set up by the company, 4,500 crores for a pellet plant in Gadchiroli. So several capex plans which total to about 26,000 odd crores. Apart from this, the company has also received a mineral resource report which says that the company has total geological resource of about 863 million tons, out of which 157 million tons is of iron ore, and the balance 706 million tons is for BHQ. Now, Aquarius has come out with a report on the back of this, where they say that the company will be sufficiently positioned to fund the entire capex through internal accruals, and that the management will not have to take additional substantial debt in order to fund this capex. So yes, important capex that has come in from the management, not a counter that we frequently talk about, but that's significant expansion plans, and hence the stock will be in focus today.
Thank you for that, Shirsha. So, Lloyd Metals will be in focus on the back of its big capex plans. But moving on the brokerages, we have Gaurav to take us through all the brokerages. We are on that part of the show where we talk about the brokerages. Gaurav, MK as well as Morgan Stanley, they have come out with reports. So, which stocks are they highlighting, and what are you gathering from these brokerages?
So yeah, Lisa, so as you rightly said that we have few brokerage notes coming in, and the first one we have is Morgan Stanley about the steel sector entirely. So they have 4 companies where they have hiked the target price. So the first one is Tata Steel, where they have hiked the target price to 120 rupees. The next one we have is SAIL, where they have hiked the target price to 85 rupees. Then they have also hiked the target price to JSPL to 525 rupees and JSW Steel to 620 rupees. So this overall upgrade in target price is coming up because they believe that the domestic demand for the steel is likely to be strong in 2024, and they are also expecting spreads to remain in the same range. But they are seeing some kind of weak segment underperformance going ahead for the steel sector overall because of weak global macro outlook, and they also believe that the domestic supply is more than the demand in India for steel, and they also believe that the valuations are a little unattractive at this moment, and that is why they have hiked the target price, but they have maintained the target, they have maintained their rating for all the stocks. The next one we have is initiation notes coming up from MK Capital, and the first have is Saregama, where they have initiated with the buy rating with the target price of 465 rupees. So they believe that the core music licensing is likely to remain strong going ahead as well for the company. Company has acquired a new company called Pocket Assist in September 2023, which is going to help them move their revenue expansion in the non-music segment as well. And with this, MK believes that the company can grow their revenue at a CAGR of 23% to come up to a target price of 465 rupees. The next one we have is Aditya Vision, where MK has again initiated with the buy rating and a target price of 5,000 rupees per share. So they believe that this company is actually in a consumer durable segment, and they have highest penetration within Bihar and Jharkhand with 50% penetration in the market itself. They believe that the company is going to foray into Hindi heartland going ahead, which is going to give company a positive outlook and the growth aspects of up to 5x going ahead. They believe that the company has best-in-class model. Under 3 years, the company is able to pay back all the investment that they have done, and with this, they are expecting EBITDA to grow at a CAGR of more than 30% over FY23 to FY27 to come up to a target price of 5,000 rupees. So it is worth noting that the Aditya Vision's share price in 2018-19 was trading at a range of 20 rupees per share, and now the company is trading in the range of 3,700 rupees. So there is already a big upside that MK is again giving up on this share price. So let's see how it turns out.
Absolutely. Let's see how it turns out for that particular counter. But another counter that will remain in focus is Max Healthcare. Now, they've entered a pact to acquire 100% of stake of Sahara Hospital. Now, the new acquisition is to acquire Sahara's 550-bed hospital in Lucknow. When you look at the estimated value of the deal, it is around 940 crores. And the estimated value per bed is 1.71. Now, when you look at Max Healthcare, the Sahara Hospital acquisition, operational bed capacity is 250. Financial year 24 revenue run rate of around 200 crores, and the transaction will be completed in 2 to 3 months. Now, the new acquisition, when you look at Sahara Hospital per se, they serve 2 lakh patients every year, and it's a renowned center of excellence specifically for neurosciences. Now, when you look at the super specialties, you've got gastroenterology, you've got neurology, surgery, cardiology, pulmonology. So all of those super specialties for Sahara Hospital. And in terms of how it aids Max Health, you've got the potential to expand presence in tier 1 and 2 cities. You've got a faster scale up amid recent commission, and the total bed count will rise from 4,083 to 4,083 from 3,533. So definitely that counter will remain in focus.
Well, yes. was on Max Healthcare, but let's talk about a paint company that will be in focus today, and I'm talking about Kansai Paints. Well, they announced that they will be launching 11 products, and that is aimed to further their premiumization portfolio going forward. They were already strong on their premiumization, and that's their efforts to build in that stronger. Well, on their distribution expansion, they are hiking traction in South as well as the West India, and also they will be pushing the sales, and that is through online incentives to influencers. The tech-led innovations in auto paint segment, that is also expected to drive the traction, and they will be extending the B2B segment to 75 cities. They will be hiking share of the waterproofing as well as the allied segments to 10% of the sales. And for now, the rural demand pressure that continues, but some green shoots that are seen for now, and the urban demand that remains resilient. Well, talking about the non-automotive business, that is seeing a turnaround, margin uptick. So all in all, new launches, expansion, margin uptick as well as demand being resilient. That's quite positive for Kansai Paints, which will be in focus today.
Well, absolutely. So, Lisa, a busy day for you since Kansai Paints will remain in focus. But when we look at Cyient, there was an analyst day, and let's look at key takeaways coming in from there. Now, they're aiming for a revenue CAGR of 10 to 20% over 3 to 5 years. In terms of their guidance, they're expecting margin uptick post-financial 24 guidance hike. And when you look at their growth drivers, they're expecting M&A to be the growth driver going ahead. And they're also looking for capability-driven acquisitions as well. So that is an important announcement coming in from Cyient. They're also aiming for strong, sustainable profitable growth path, and also looking at growing a balanced portfolio. So a couple of those things that they're looking at. And they also aim to deliver intelligent engineering and tech solutions. So Cyient will remain in focus today.
Right, and let's look at some other announcements. A new Argentine President Javier Milei spoke to his supporters shortly after his swearing-in ceremony. Milei immediately moved to prepare the public for a painful shock adjustments with drastic public spending cuts. South America's second largest economy is suffering 143% annual inflation. The currency has plunged, and 4 in 10 Argentines, they are impoverished. And a shooting in Atlanta killed 3 people and left 1 victim wounded. Now, according to police, 3 victims in their 20s, they were pronounced dead at the scene, and the 4th was transported to a hospital. Now, investigators, they believe that the shooting was linked to a drug activity. And the ongoing COP28 summit has seen countries pledge hundreds of millions of dollars for climate action. Being held in Dubai, COP28 is nearing its end, and negotiators are scrambling to try to map out a final resolution on different issues such as climate action, finance, adaptation, as well as energy transition. So far, 118 countries, they have reportedly signed the global renewables as well as energy efficiency pledge, agreeing to triple the worldwide installed renewable energy generation capacity to at least 11,000 gigawatts by 2030.
And US President Joe Biden has invited Ukraine President to a meeting at the White House to discuss the ongoing war against Russia. The meeting comes as the White House looks to strike an agreement with Congress that would provide military aid for Ukraine and Israel. In a statement, the White House said that the 2 leaders will discuss the urgent needs facing Ukraine. Now, after days of suspense, the BJP announced Vishnu Dev Sai, a tribal leader and former union minister, as the new chief minister of Chhattisgarh. The 4-term MP, who has been the president of the Chhattisgarh unit of the party from 2020 to 2022, is known for his organizational capabilities and has a non-controversial image. Now, Chhattisgarh CM announced that Rajasthan and Madhya Pradesh will remain undecided. Now, Centre appointed observers to chair a BJP Legislative Party meeting in Bhopal today. Suspense likely to end on Madhya Pradesh CM's name.
And that's a wrap on this edition of Market Cafe. But stay tuned as we take all the action on the market. And for now, it's a goodbye from me as well as Shreyansi. Thank you for watching.